Hey guys, JTez here. Welcome back to another video. A little bit of a late video tonight, um, but long day at work and stuff. And I'll be honest, I wasn't planning on making this video tonight, but I thought to myself, consistency, 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 consistency. Do it now, do it now, do it now. If I just keep doing that, it will pay off. So here I am. So today was obviously a high impact news today. We had a PMI, 15 minutes in the market open and 30 minutes in the market open at 8:45 and 9 a.m. Market opens at 8:30 for me. I did de-risk. Try to do the half a percent risk, but there's an issue with like such small units and stuff, and it was like a freaking 4 unit trade, so it was either $40 risk or like $60-ish risk, and I was like, I'll do the 60. But pretty close to my half a percent anyway, so it's fine. Did wake up late, like 9 a.m. late, which is probably a good thing because it stopped me from even checking the charts at that early in the morning. Well, actually, no, it wouldn't have been a bad thing. Actually, I'll explain why. But woke up, made some breakfast, got some coffee, chilled for a little bit. Hop at the starts around 10 a.m. Started looking for setups, waited a little bit. We'll talk about that. So, couple things. Hold on. There's something I wanted to look into real quick. What was it? This one? Man, I feel dumb. Okay. Yeah. Got to mark this out. I marked it out and then deleted it. Because I didn't think it was relevant anymore. But clearly it was. Alright. So let's kind of talk about this. This was the trading day yesterday, where I had my break even and stuff. And then kind of did all this overnight. Price rebalanced equilibrium at about 9:20 this morning. Price actually didn't get affected that much due to PMI. So I'm looking for 8:45, which is this candle. Not too bad. A little bit choppy, not too good price action. Then that, and then at 9, big sell off caused us to sweep liquidity and rebalance equilibrium. As you can see, rebalanced, and then price went higher. I was doing some research actually recently into these inverse value gaps, right? Because I've just like they always work. I've just been using them wrong. And something that I've noticed about a lot of people who enter off of these inverse value gaps is it doesn't really matter where you enter. You don't really need to enter off of a retracement to said inverse value gap. However, like you can if you want to, but not all of them work though. But the whole idea is to confirm a bullish or bearish bias. So here we rebalance equilibrium. That's a building block that tells me, okay, we're still bullish. We just had a retracement to equilibrium. Then we inverse this bearish fair value gap, telling me, okay, now we're definitely in a bullish trend. I can enter here, put my stops like here maybe, and then target previous highs. That's something that I learned today actually. Obviously, when it comes to these fair value gaps and inverse fair value gaps, they do tend to get more respected, I guess. Something else, if I dare to mention, that I personally noticed. I'm trying to see if it was on this time frame or not. Ooh. Like I noticed it, but I didn't really mark it out because I didn't think it was relevant, right? think this is the better one. Yeah, this might be the better one. Is I marked out this this bullish order block right here. Yeah, I marked out this order block, and honestly, this would have been a great setup around 1:20 p.m. had I been on the charts and stuff. But after I lost this trade, I just kind of closed the charts and went about my day because, like I said, it was high impact news. This right here was a perfect example of me not necessarily waiting for my setup. My initial setup was actually down here. I saw price around 9:50, 10 a.m. ish right here, and I was like, okay, I think price might retrace to this inverse for value gap and this value gap. Didn't have this more order block marked out though, and I mean price did retrace way later, and then price soared, taking out these highs. I think this was just a clear indication of FOMO. You know, I saw price running. I didn't listen to myself whenever I told myself, hey, you know, it's okay if I lose this trade, right? Or no, sorry. Well, I don't know what I'm talking about. I'm sorry, guys. I'm tired. It's okay if I don't trade if I don't see a proper setup. This right here was a C plus setup at best, right? This down here was pretty much an A plus setup for me. Was it way later PM session? Yeah. This right here would have been the best setup personally. You know, I would have saw okay, big accumulation right here. I mean, I'm not an ICT fan, but I do respect a model where I see it. Manipulation distribution. Something else that I'm just now seeing as I'm talking about this. What do we have here? An area of accumulation. Honestly, this was just like a skill issue today. You know, I should have marked all these things out. I should have been more aware of the um, of like the setup and stuff. I should have been up earlier. I need to make sure I'm getting up earlier. Area of accumulation, yada yada yada. Price rebalances equilibrium, taps into this area of accumulation, rallies off of it, creates an. Just this alone would be enough for me personally. You know, we've been we've been bullish. Price revisits accumulation, uh, and then rebalances equilibrium. Me personally, this right here, this one big candle that decided to soar upward right after would have been plenty for me. It's not a break of structure, but it still would have been. Well, actually, let's see if it is a break of structure on that end. Yep, it is right here. Break of structure to the upside. Sorry, long tool. Yep, would have entered somewhere around here. Stops below these lows. Now, targeting these highs is already a 3.2R trade, which is insane. Now, if I wanted to have multiple take profits, take profit 1, take profit 2, take profit 3, totaling a 5R trade. At half risk, this would have been about $250-ish instead of. So this is a perfect. I mean, honestly, like with what I was talking about last night, me being on advanced path and stuff, I think a lot of it is just because of self-transparency and self-honesty, right? Self-reflection, all of that is like I'm sitting here and I'm like, okay, I simply missed this because I was lazy. I mean, I woke up to my alarm at 6:30 this morning, but I wanted to sleep in, so I slept in, and I woke up at 9. Um, Trying to think. So yeah, really, there were only two what I would consider A plus setups, right? I would say A plus and B plus. So A plus would have been this one right here. B plus would have been this one right here. You know, in this order block, in this inverse value gap, and in this, I don't know why it's not time, in this 15-minute value gap, right? And all of this, enter at the top of the inverse, or no, we'll do that, top of that, stop at the bottom of that value gap, targeting this high, or this high, or this high, which is a $6 trade, which is still freaking insane. But hey, it works, right? I mean, honestly, I'll just probably target this high, or I'll probably do two. So this high and this high, right? This one, I'm trying to think, 4.5 hour trade, $50 risk. That would have, that's about 250 right here, half of that. So about 125, right? And then I still got 125 of my units left. Would have closed the rest up here, 125. So this would have yielded me about $250. For a $6 trade, that's not the greatest, but if you want to be safe with the multiple take profits, well, considering this is such a high, I probably just would have targeted that mainly and just let it run. And boy, did it run. This would have been a trade I entered anywhere from 123 to 154 and got out of it at 510. That's enough speculating. That's like a good B plus setup. This right here is the A plus because this is retracement, this is liquidity sweep, equilibrium, and accumulation zone. Should have noticed it. I didn't though. Oh well, that's on me. Honestly, this might be better mark out. There we go. But oh well, it happens. That's why I like making these videos. That's why I like journaling. Helps me to learn from my mistakes. Anyways, I don't really got much else to talk about. Except maybe tomorrow's trades. Oh yeah, these were today. PMI, job openings, 15 minutes in the market open, 30 minutes in the market open. Tomorrow at 7:15, we have non-farm employment. NFP, not very good. That's actually an hour and 15 minutes before market open. I'll try to be up at that time. And how late it is, yeah, I'll try to be up at that time. If not, if not, that's fine. But I won't be on the charts for sure. I'll probably trade normal session tomorrow. Depends on price volatility too after, because Trump speaks tomorrow at like 3 p.m. So price might be crappy. I'm not sure. We'll see. I think we're pretty much gonna stay the same for Thursday and Friday. Friday for sure. I'm not trading. Thursday, I'm probably not going to trade. Yeah, hour, 15, and 30 minutes in the market open. Yeah, no. So tomorrow's probably going to be it if I do trade. If not, I will see you. Well, will I see you guys next week? Let's see. Monday, no news. Tuesday, no news. Wednesday, FOMC. Thursday, CPI. Friday, PPI. Okay. The first half of the week is looking good. So I'm happy. So I will see you guys next week if I don't trade tomorrow. So, alright. Well, I hope you guys enjoyed tonight's video, trade recap. If you did enjoy, please like and subscribe. If you have anything for me, please leave it in the comments. Appreciate you guys watching. You all have a good night /day.